Okay, Shanna. I think life insurance is one of those topics that everyone knows they should deal with, but it's so easy to push to the bottom of the to-do list.
Hi, that's me. That's me. I get it. It's not exactly the fun, light conversation that people want to have over dinner like we had last week. It was a great conversation.
Oh,
so
it's
I'm with you.
not even close. It feels heavy. It feels serious. And honestly, Shanna, it's a bit intimidating.
It is. And we get scared of things that we don't really know a lot about, right? We just don't talk about it. So nobody likes to think about what happens if they're no longer able to take care of their family. But I have sat with people, customers, friends, family, who had a plan in place. And the sheer peace of mind that it has given them and their spouses is truly just incomparable.
And if you think about it this way, think about it as the ultimate act of love.
Yeah.
It's not really about us. It's about the people who rely on us. But I think the part of the reason people avoid it is because the terminology sounds like a foreign language.
It's the worst. And we're in a financial industry business and it's the worst, right? So you're talking about between premiums, cash value, riders, death benefit. What does all that mean? And it's enough to make you just want to get up from the table and walk away.
Well, that's what we're going to strip away today. We aren't here to use industry jargon. We're here to break down the two main ways you can protect your family: term and whole life insurance. Now, I want to say right at the top of this, we are not insurance people.
No, we are not.
We're not pros.
Nope.
But we do want to help maybe strip away some of the fear and some of the uncertainty. So I want to encourage you, listen to our podcast, but then go talk to your insurance person.
That's right.
Go in armed with some of the things we're going to talk about today and have a conversation with your insurance carrier about what are my options.
Yeah, and that's how we're coming to you today, right? We can talk about banking and financial all the time. We're just trying to give you enough to arm yourself, just like you said, and go have that conversation. So we're going to talk about how term and whole insurance, how they work, why one's a better fit than the other for you than someone else, and how to think about that without feeling like you just need a large degree in finance of some kind, because you don't.
Welcome back to Making Sense of Your Sense. I'm Daniel Hill.
And I'm Shanna Browning. And so today, we're going to take back that curtain again on life insurance. We talk about doing that a lot, but we're going to break down the two most common types. And what we've said before is they are term and whole. So you can decide how to best protect your family's financial future, no matter what phase of life you're in.
And Shanna, let's start at the beginning with the why. When you strip everything away, what is life insurance actually trying to do?
Well, it's a contract, Daniel. I mean, it's just all it is. You pay the insurance company a set amount, your premium, and if you pass away while that contract is active, they're going to pay a lump sum to your beneficiaries. Now, beneficiaries.
Yes.
Let's talk about that real quick. Beneficiary means who you're leaving that money to, right? That's it's a big word.
Yes.
But it's basically who you're assigning that money to when you die.
And
that's
you can
all that
you can assign beneficiaries at different levels.
That's right.
Like, for instance, if I wanted to assign my wife as primary beneficiary at 100%, if something happens to me and she's still alive, she gets that 100%.
Of that
and then you
insurance.
can do secondary. So like if I wanted to divide that between my kids, if my wife and I were both gone when that life insurance policy takes effect, then I could specify that gets divided evenly between my children as well. So
that's correct.
There's multiple levels that you can have on that beneficiary payout.
Yes. So great. I think that was great to talk about.
And that's what they mean when they talk about death benefit. That's the money that goes to your family or your beneficiary.
Yes. And so that's the whole point. And that's where it becomes income replacement, right? Because you're gone, Income is gone. So what's the income? So where are you going to get money? So that's the income replacement. If you aren't here to bring home a paycheck, the money steps in to cover the big stuff, the mortgage, the groceries, the kids' college fund, whatever you sit down with your family and go over. That's what that does.
And I think a lot of people feel like that's not something they need because they aren't wealthy. Is that something that you hear a lot?
All the time. All the time. People say, I don't have assets to protect. So why do I need insurance?
And what do you tell them?
You're going to love this answer. I tell them, but if your family relies on you for your income to keep the lights on, or you have a need, it's not about protecting wealth. It's about protecting your family's ability to stay in their home and eat.
Oh, wow.
And let me just tell you, people always ask too, in this realm of this conversation right here, people will say to me, well, how much do you know how to get? I tell them, don't be worth a whole lot more dead than you are alive.
Oh, that's good.
Right?
That's good.
So every family situation is different.
Yeah.
You figure out what you need for your family if you die. If you die and Shannon is not working, then what's that look like for y'all?
Yeah.
I die. Bart does work, right? So he's going to have an income too.
Right.
Right. And Shannon does as well.
Yeah.
But I'm just saying, you've got to figure out
what
your scenario. That is correct. And that's just a good rule of thumb to look at. Do you need $1 million? I don't know. Maybe you do. I don't know. So,
and I think that's a great way to put it.
Yeah.
It's about keeping the quality of life as close to normal as possible during a worst case scenario. So to your point,
yes.
If you're not worth $5 million,
why do you need it?
Exactly.
Why do you need it?
Exactly.
So I think it's a good question to ask.
So let's get into the two main types of life insurance. Shanna, explain term insurance like we're sitting in Chris's coffee shop, Hangar 37, over a cup of coffee.
Deal. So I want you to think of term life like renting an apartment, right? You're buying protection for a specific time window. The term is going to be 10 years, 20 years, or 30 years.
And the price or the premium is locked into that time, right?
That is correct. And that's the beauty of it. It's very predictable. If you pass away during that term, your family is covered.
So let's say I'm 90 years old. I'm just throwing this out here because it's,
it's a good number.
Random number.
I got you.
Let's say I'm 90 years old. I don't need a 30-year term life insurance policy because, quite frankly, the chances of me making another 30 years probably isn't going to happen.
Correct.
But if I'm 40 years old, I might want to consider a 30 or even longer term policy.
Correct.
If the term ends and I'm still here and the kids are grown,
then
what
the policy just ends. I mean, it just ends. You don't have to worry about it anymore. You've had the coverage during the years you needed the most.
And that sounds almost too simple. Here's my next question. How expensive is it?
It's a good question. It's one to have, but it's actually not expensive. It's usually very affordable because that's what it is. It's a protector. And that's all it is. It's a pure protector. So no extra bells, no extra whistles. That's why we love it for young families.
So for a family with young kids and a mortgage, term is usually the go-to.
That is correct. 100%. You're right about that. You're getting the maximum amount of protection for the lowest cost during the years when your family is the most vulnerable. It's smart and it's a tactical move.
Hey everyone, Daniel Hill here with a quick question for you. Is your most sensitive financial information sitting in an unsecured metal box on the street right now? Paper statements are one of the primary targets for identity thieves and mail fraud. When you make the switch to e-statements, you're moving your data out of the mailbox and into our high-security digital vault. It's significantly safer, and it's a whole lot faster. You'll get an email the second your statement is ready without having to wait days for the mail carrier to arrive at your house. Plus, you can finally say goodbye to those shoeboxes of paper and filing cabinets taking up space. We keep your statements archived and accessible right in the app whenever you need them. Whether you're hunting for a record during tax season or providing documentation for a new loan. It takes less than 2 minutes to enroll through our mobile app or online banking portal. Protect your identity, clear the clutter, and take control of your records today. Now, let's get back to the show. Now, what about the next one, whole life insurance? That's the one everyone says is complicated.
And it is. It's definitely complex. So if term, going back to our scenario, if term is renting,
Okay.
then whole life is like buying a house.
Way to put it on banker's terms.
That's right. That's the way we are. It is designed to last your entire life as long as you're paying the premiums. Got to pay them, right?
And since it's permanent, it costs more?
Much more. Yep. But there's a big trade-off. It builds, whole life builds cash value, which is one of the words we talked about.
Yep.
That's, this big fancy word or term of it builds cash value.
So explain cash value. Is that like a savings account inside the policy?
Kind of. It is, yes. But a portion of your payment, a portion of your premium is set aside and it's invested by the insurance company because they do that too. So there's part of it that's invested by the insurance company. So it grows inside that policy over time.
Can I use that money?
Sometimes you can borrow against it. Or if you surrender the policy later in life, you might get some of that value back. But Daniel, we're going to be very clear here. It's not a high growth investment account. Okay. We're not talking like a 401k. We're not talking like stocks. We're not there.
It's not something you can retire on.
No, it is not a high growth investment account.
So then why would someone choose whole over term?
Well, long-term goals, right? So let's think about that. It's specific long-term goals. Maybe someone wants to leave a guaranteed inheritance, what I just said a little bit ago, or they have a lifelong financial obligation to that, or a child with special needs. It's a tool for permanence, and it's your family scenario. That's what you have to look at.
That makes sense. And that's why we encourage you, take the information we're giving you and go talk to an insurance professional.
Yes.
This hopefully will allow you to talk more intelligently with them and ask questions and maybe get answers back and not have to worry about them explaining cash value or death benefit or some of these other things. Shanna, we do get a lot of questions about this, and people hear conflicting things. Social media, you get all kinds of stories there. What's one of the biggest questions you see?
All the time. Can I have both? Yes, you can. You don't have to choose just one. Many people start with a big term policy when their kids are young to protect their income, and then later in life, they might add a similar whole policy for legacy goals.
That does make sense.
Yeah.
It's like having a big umbrella when it's raining, then keeping a smaller permanent one just in case for later on.
That is a perfect analogy, Daniel. Perfect. So here's another one we get. How much coverage do I actually need?
So we talked about that a little bit. Don't insure yourself for more than you're worth.
Right.
I tell people to look at their income replacement. If you make $60,000 a year, look at what that would take for your family to live for 10 years without your income.
Yep. And that's just that whole scenario right there. That whole sentence by you is so important, but because it's a gut check number, right? We all know we ain't going to be here forever.
Yeah.
So we got to figure it out, right? So it's a gut check number, and it's not an exact science.
No.
But what we're doing for you today is getting that conversation started.
Exactly. We just want you to be thinking about the what ifs.
And don't be embarrassed. We talk about that a lot, right? Scams, fraud. People don't talk about things because they've done something or they're embarrassed that they've done something. Do not be embarrassed. This is your life.
Exactly.
This is your kids, your family life. That's important. So do not be embarrassed about. Go in there and tell them. If they start talking cash value, if your insurance agent starts talking about cash value, death benefits, stop them and tell them, I'm going to need you to come down a little bit on those terms.
Yes.
I expect you to do me that way in banking, right? When we have those conversations. If I'm talking words you're not even familiar with, stop me and tell me. And that's what this is right here.
That's the whole mission and purpose behind why we started this podcast, is to answer the questions that maybe you're afraid or don't even know to ask.
Yes. I love it.
So this has been a very heavy conversation,
and
but I think it's very, very vital. So let's get everyone to their actionable tip for this week.
All right, let's do it. It's called the coverage calculator.
So what we want you to do is go to a reputable insurance calculator, life insurance calculator this week. You can probably find them online. Your insurance company may have one.
Yeah.
Or call up your insurance carrier and just say, hey, I've got some questions. Put in your current income, your major debts, and how many years you want your family to be covered.
I mean, it's really that easy. Right? We do it with car payments.
Absolutely.
We do it with house payments. You can do it the same way with this. It's a rough estimate. It's just a rough estimate, but you're seeing those numbers in black and white. If it's your visual and what your family would need if your income was gone, and sometimes very suddenly. So it's the best way to get serious about your protection plan. So, Daniel, life insurance really isn't the easiest thing to talk about, right? But I feel like we've clarified a lot of that today. And it's not about the what ifs. It's really about the will be's.
Right.
Because this is going to happen. So making sure that plan is there for your family stays secure when you're not here.
Exactly. And, it's one of the big foundational pieces of your financial home. Once you've got it in place, you don't have to worry about it every single day. You just know it's there and working for you.
And that's the best way to put it, right? So now, for next week, we're going to shift gears a little bit from long-term protection to present-day progress. We're going to do a mid-year financial review, the halfway mark.
Yes, June is the perfect time to look at those goals that we set back in January. We're going to help you figure out what's working, what needs a tweak, and how to finish the year stronger than you started.
And we're going to tell you, make sure you're subscribed and that you don't miss the mid-year check-in.
We appreciate you trusting us with your financial questions. We'll see you back here next Tuesday.
And until then, keep making sense of your cents.